The Fear and Greed Index is currently sitting at 32, up from yesterday's 29, still resting in the fear category. Crypto sentiment is currently sitting at 46.35, still in the somewhat bearish category. But remember that during the Trump election pump, where most people consider to be the beginning of the bull run, crypto sentiment was already sitting at 71 before that breakout had even begun. The amount of XRP that is currently locked up in ETF vaults is now sitting at $750 million. The daily is sitting mostly in the red, while the weekly is about 50-50. Looking at the monthly, we can see that there are quite a few standout cryptocurrencies that are doing very well compared to the rest of the crowd. And when we take a look at the yearly, we can see that the vast majority of high-utility cryptocurrencies have been getting the pants kicked out of them, with Ondo sitting at negative 73.3%, XDC down 27.2%, Algo down 66.6%, HBAR down 61.3%, SUI down 66.3%. Does this look like a bear market that has just started, or one that has been going on for quite some time? When we look at the top 1,000 cryptocurrencies by market cap, we can still see that the 1 through 100 category is still in the green, up 4.1% on the year, with the 101 to 200 category sitting up plus 82.7% on the year, while the other 8 categories are still deep in the red. When the worst isn't over quite yet, and you're already ready to celebrate. Because where the vast majority of people see a storm, you see an opportunity. And as always, this is not financial advice and is nothing short of the rantings and ravings of a man that when the vast majority of people become bullish, becomes bearish. And when the vast majority of people become bearish, becomes bullish. But do me a favor and hit that like button before we get started. I would really appreciate it. Now, in jumping over and taking a look at the XRP chart, this is the daily chart, we can see that the price has been trading within an ABC correction pattern going back since mid-January of 2025, just after the Trump election pump. If we zoom in on the wave C right here, we can see that it's trading in a 5-wave move to the downside, of which we are now trading within the wave 5 of that C wave, which is trading in the form of an expanding ending diagonal. As I have talked about in the past, I talked about the potential for this wave 4 right here to move up to the top of this upper trend line. Now I have adjusted this upper trend line on this particular expanding diagonal quite a few different times. But when looking at the chart, we can see that the price action has formed a bearish fair value gap right here, which is capped with a small bearish order block sitting directly on top of it, which is resting right up in the area of this upper trend line, as well as the 50-50 line on the Gaussian channel, which is just now breaking below that upper trend line. In regard to this 5-wave pattern that we are now looking at right here for the C wave, I looked through a ton of charts to try and find a pattern that was similar to what we're seeing now so that I could get an idea of what we could potentially see moving forward. And I found one in the strangest of places. Now, when we take a look at the Telcoin daily chart, going back into that 2018-2019 time frame, even pushing slightly into 2020, we can see a nearly identical pattern, a 5-wave move to the downside, with the wave 3 resting at the bottom of a liquidation candle, with the wave 4 moving to the top of the pattern, pushing into a wave 5 to the downside. Looking at the current XRP chart, you can see that these two patterns are virtually identical. If you've been thinking about trading spot, or if you're just looking for a place to swap your cryptos for 0 fees, use my link and sign up for BitUnix. You'll be glad that you did. Now, putting them each side by side with the Telcoin chart on the left and the XRP chart on the right, both of which are at the same point within the wave 5 on each of these two charts. with this pattern occurring in Telcoin about 5 to 6 years ago versus the current pattern that we're seeing in XRP. We can see that it had a 5-wave move to the downside within the wave 5, which we are doing the exact same thing, with the main difference being the wave 3 termination on the Telcoin is sitting in a slightly different place than what we're seeing on the XRP chart. But the same thing that we are seeing on the XRP chart now by forming this bearish fair value gap right here, Telcoin did the exact same thing within this pattern, forming one right here. And you can see that after forming the wave 2 termination, price pushed down and had this rounded look to it right here. We can see the same thing on XRP right here. It pushed down, had this rounded type of look right here, before pushing into this foot shape right here that we see right here on the XRP chart. Now keep in mind that the distance on this chart represents a much larger time frame than what we're currently seeing on the XRP chart. As from this wave 2 right here was from mid-September 2019 to the wave 4 termination about mid-December 2019, lasting the span of about 3 months. To where what we're seeing here on the XRP chart spans from about mid-November to where we're currently sitting now here at the end of December, about half the time. But when we look at what happened after Telcoin had come down and set this wave 3 termination, trading up into this foot, price then pushed up, wicking into this breaker block before getting rejected and pushing down into a 5-wave move to the downside to complete the pattern. It's looking very much like we could see something very similar with XRP, perhaps gaining momentum and pushing upward into this weekend, perhaps early next week, and getting rejected off of this breaker block right here to move into the 5th and the final wave of this pattern, which would likely be very aggressive, just like what we saw here, as it is an impulsive 5-wave move to the downside. Also, taking into account the fact that the markets are going to be closed tomorrow, but then reopening for a full trading day on Friday, being closed Saturday and Sunday, and of course the crypto market is still going to be open. As I've talked about in previous videos, this 2-week set that we're now sitting in now over the holidays of Christmas and New Year's tends to have very low liquidity because the market is not trading at full strength, as a lot of the big dogs take this 2-week time period off. So this weekend very well could present heading into the full moon on Saturday, which would be January 3rd, or 1-3 or 13, to perhaps push price up into the weekend, getting into the range of this bearish breaker block right here before heading into next week, where we could see this final push to the downside over the following weeks, getting people to FOMO in on this little push to the upside here before reversing the price to the downside. It might not happen in that exact time frame. It might not happen at all, but looking at this pattern here, we've seen that they're almost identical and they are forming very, very similar to one another, and that's exactly what happened here, taking a draw on the liquidity resting in this breaker block before seeing the ultimate rejection to the downside. After being rejected, price traded down even beyond the 1.786 on Telcoin. After this point, this basically marked the bottom, setting the trend line off of this flash crash right here, heading into the wave 4, setting this bottom here, which is exactly what we have seen on the XRP chart, with the flash crash candle right here matching both into the wave 4, right here, into the wave 5. They are almost identical. But once setting the bottom here, price then moved up into the wave 1, down into the wave 2, and went on a heck of a run. Since that point, after setting this lower trend line right here off of those 2 points, price, still to this very day, has not traded below it, which I find very, very interesting, and which very well could apply to what we're about to see with XRP. And when we look at the current XRP liquidation heat map, this is the 3-month chart, we can see that below the current price is billions and billions and billions of dollars worth of liquidity remaining. The billions don't start to run out until we get into that mid $1.25 to $1.30 range right through here, meaning there is still a considerable amount of liquidity resting under current prices that could push to much lower levels, perhaps even down to that 120 range, maybe even a little bit lower. When we look above current price, we see the thickest band of liquidity is resting right here at $2.72, which is sitting at nearly $10 billion, with massive, massive amounts of liquidity pushing all the way up above current price, not getting into the millions until we get to about that $3.75 range, which is above the previous all-time high. The vast majority of these orders right here are most likely short positions, as we can see that after this flash crash is when they started stacking up. And if you know anything about the market, you know in order to cover your short, which is called buy to cover, you have to buy back the coins that you already sold into the market. And the difference between the two is either your loss or your profit. But by having such an incredible amount of liquidity resting right up here on the buy side, if price did push down into this lower liquidity, absorbing the sell side liquidity, moving up into this range aggressively towards this concentrated area here, the more it pushed up into this area would cause more and more buying to occur as the vast majority of these short positions start to cover. And the combination of people chasing the green candles on the buy side, as well as these short positions buying to cover, it could very well eventually give us the momentum we need to continue pushing to the upside, perhaps even eventually setting a new all-time high. But when we look at these two charts, we see a clear pattern right here that matches what we're seeing now on XRP almost identically. And when we look down here, we also have a bullish fair value gap sitting centered at about $1.35, which rests right in the area of these fib levels. The 1.618 is resting at about $1.27, all of which are right in the range of where the liquidity starts to dry up on the heat map that I just showed you. And when we look at this from the grafting charting strategy in regard to the equilibrium, right here, we can see that the price during the high traded up into the range of these two red bars right here, pushing up nearly halfway to the green. And that's the reason why it's called equilibrium, because as above, so below, and vice versa, which means the two red bars are resting right here and pushing about halfway between the red bar and the green bar would put it right in this area, which is another point of confluence in regard to the price potentially coming down to this area. And if you've followed my videos for any amount of time, you know that I also have other methods that I use to calculate the potential highs and lows by using the equilibrium. One of which I've talked about in the past is by going off of the high in any particular pattern, using that as the starting point for your measurement. Then what you're looking for is the 50-50 line of the Gaussian channel right here. The candle that broke through, pushing the opposite direction, in this case to the downside. You want to go off the bottom of the body of the candle, matching it with the 50-50 line on this measuring tool, which would put it right here. We can see that this gives us the measurement of $1.13. That's another point of potential confluence. These aren't always 100% by any means, but they do give you a good idea of what you can potentially see, because that's the whole point of equilibrium. And when we look at the CCI, we are still seeing the exact same symptom that I have been talking about over and over and over for quite some time now, with the blue line eventually going to get ready to cross over the yellow line. It looks to me like what we could expect to see would be this big final flush to the downside to push out the remaining weak hands, setting a bottom and starting the reversal pattern to the upside. Now I know that the vast majority of people still believe that we just recently entered into a bear market right here in October when Bitcoin hit its all-time high, but I do not believe that because we have actually been trading within a corrective pattern in the form of an ABC going all the way back since mid-January. Even though the Wave B termination came up and took out the previous high, this is still a corrective pattern, which means going back to this time here, come mid-January, we will have officially been trading within a year-long correction. Most people are marking this as the peak of the bull run, when on the vast majority of cryptocurrencies, the peak of the bull run was right here in this mid-December to mid-January timeframe. Because from what I can see from the charts, only XRP, ETH, and Bitcoin actually pushed up with the Wave B taking out the previous high. The vast majority of the other ISO coins and other cryptos, which are still trading within this same corrective pattern, had Wave B terminations resting below this previous high, all of which are currently trading in the Wave C or the Wave Y of corrective patterns right now. And I do believe that when this turnaround occurs, it's going to happen at a point when the least amount of people suspect it. And I keep hearing quite a few things in different areas of people talking about 2026 being absolutely bearish, pushing all the way to 2027. Some people saying we're in a bear market until the next cycle in 2028. And even though some of these people might actually be correct, I absolutely disagree with them. I think we're going to move into a completely different cycle a lot sooner than the vast majority of people realize. But in regard to this particular pattern, it's almost undeniable that we're seeing the exact same pattern right here that we saw on the Telcoin chart, and it's very likely that we will see a similar result. As when you put these two patterns side by side next to each other, with Telcoin on the left and XRP on the right, these look almost identical. The 5-wave move pattern is nearly identical, both of which had a flash crash candle right here on Telcoin, right here on XRP, moving into an expanding, broadening wedge for the Wave 5, of which we are seeing on both of the charts. The 5-wave count is almost identical on both of these charts. The only thing that's missing on the XRP chart is it actually getting to the point of hitting a bottom. And that is what we are waiting for. I do believe that once this bottom is found, that will be the bottom for the pattern moving into the next bullish cycle.
Dios.